calling the Morton Grove Public Library Board of Trustees regular meeting to order, taking place on May 14th, 2015, at 7 p.m. in the activity room at the lower level of the library. Call to order. Pledge allegiance, please. And has everybody reviewed the minutes from the last meeting?
I'll motion to approve.
Oh, roll call. I have a thing about numbers too. I don't like number 2.
I'm telling you. Okay. Trustee Gonzalez.
Here.
Trustee Novick.
Here.
Trustee Peters. Here. Trustee Elders.
Here.
Trustee Berg. Not here. Trustee Kalanick.
Here.
That's right.
We have a quorum.
We do have a quorum.
Thank you. Now I'll ask for approval of the minutes from April 9th.
I'll motion to approve board meeting April 9th, 2015 minutes.
I'll second.
Any discussion? With that, all in favor, can we do
That
it?
one you want to call.
We're gonna call.
Yeah.
You spent money, you want to call it.
Yeah. Spent money.
You spent money last meeting.
We always spend money.
Trustee Novick.
Here. Yes.
Trustee Peters, yes. Trustee Elders.
Yes.
Trustee Kalanick.
Yes.
Trustee Gonzalez.
Yes.
Passes unanimously.
Okay, I'm gonna ask our secretary, Kathy Peters, to,
Okay, right now we're going to be considering resolution number 2015-3, which is accepting the canvass results and proclamation for the April 7, 2015 consolidation consolidated election for Morton Grove Public Library. The total votes cast for library trustees was 1,790, inviting unanimous consent of the people of Morton Grove. Ms. Stephanie S. Gray has been elected. This resolution is to be passed on the 14th, which is today, and everybody has a packet of it. So can I have a motion, please, to accept resolution?
I'll motion to approve as presented.
Second.
call the question?
I will.
Oh, page, please.
Huh?
This one's
This is the
I want to do everything properly.
2015-3. Okay.
You gotta call all the A's, all in favor?
Oh, you want to do it that way?
Yeah.
Okay. All in favor?
Aye.
Say
Aye.
Opposed? Abstentions?
Welcome
So we
aboard.
have 1, 2, 3.
4, 5, 6.
There's 5 of us.
There's 5 of you that voted.
2,
Yeah.
4, 5.
5.
5 A's.
5 and 1 absent. Okay.
Now the oath.
How
You
the?
got it. So, we started. Secret code to the email.
When you do finish the FOIA training, we need a copy of the certificate.
I gave it to,
Oh, she's already
I
done
did
it.
it, thank you.
And
Wow.
from now on, when we take the vote, we'll be.
Okay.
You're counted.
You're
For
counted.
the rest of the
Yeah.
evening,
Okay.
you're
Yeah.
official now.
For the next 6 years, you're counted. Okay.
Now I'm calling on okay,
Ryan from
Brian to go through our
You're going to 10A.
presenting our accounting audit.
And Brian, I'm sorry, I don't recall your last name.
Lefevre.
That's right. This is Brian Lefevre of Sickett, and these are the
I
actual.
have already.
I got it.
You got both?
Upstairs. Yeah.
Okay.
And don't spend my money.
Yeah, there's 2 things. There's the financial report and this, okay?
I've
He's got
got
both?
both.
You probably have
Oh.
Paul's copy.
What do we got here, Mikey?
Do you have both?
Both, yeah.
There's different ones. There's the auditor's report and auditor's communication and
It's like we have
annual.
plenty of copies.
Kathy needs an annual financial.
Oh, okay.
I have one.
No, you need to.
I need two?
Yeah.
This is my special.
No,
There's 2 different documents.
you're the same as everybody else.
It's all yours.
All right. Well, on behalf of Sickett, I'd like to thank the board for inviting us here tonight to present the report resulting from the audit of the library for your year ended December 31st, 2014. You should each have two documents. We're going to start with the annual financial report, and then we'll work our way into the communication to the board. The annual financial report, if you take that document and turn to page 1, you'll see that's on Sickich letterhead. This is where we give an opinion on the financial statements. In order for us to give an opinion on the financial statements, we have to follow two sets of standards. One are the auditing standards that are issued by the American Institute for Certified Public Accountants, or AICPA, and that tells us the type of procedures that we need to perform when we're conducting our audit. The other set of standards we need to follow are the financial reporting standards issued by the GASB, the Governmental Accounting Standards Board. And the GASB tells us what the financial statements, what form they should look like for local governments such as yourself. Once we apply those two sets of standards, then we can issue an opinion on the financial statements. We're pleased to present an unmodified opinion, and what that means is that the financial statements are presented in accordance with generally accepted accounting principles, free of material misstatement. And this is the highest level of opinion that you can receive on your financial statements. Just past the independent auditor's report, you come to page 3, which is the first audited financial statement. You want to be, you have two. You must have, you have two of the same. You have two of the same document. He needs an annual financial report. No, these are both the same. She's going to get you.
You got that.
Yeah, so you just got doubles. That's all. Never wanted to have doubles when I had baseball cards either.
You're on
So
page
3 is the first audited financial statement. It's the statement of net position. The statement of net position, along with the facing page statement of activities, is what I refer to as the global view for the library. This takes the funds that you operate and rolls them up onto one page, adds the capital assets and any long-term liabilities all onto one page. So this takes that data and puts it onto page 3. You end up with the concept of net position, which is basically assets minus liabilities and deferred inflows. So your unrestricted net position was $1,588,000. On page 4, the statement of activities, and both these pages are on a full accrual basis of accounting, so depreciation is a charge, as an expense, whereas that's not how you operate from a budget standpoint. Your change in net position, $63,271. It tells you you're economically better off as a result of the year of operations. Now, what you're more used to seeing is information for your two funds, which is on page 5. So you have your general fund and your special reserve fund. This is on a modified accrual basis. Those first two statements are always going to just be in your audit. That's required to get that unmodified opinion. But the operational statements, I'd like to call them, begin on page 5. So your general fund, you have assets, liabilities, deferred inflows again, and then fund balance. Fund balance is essentially reserves. Those are the reserves you had to begin the fiscal year that you're operating in now. So if you look down at fund balance, after you collect on your receivables and pay your liabilities, your fund balance was $1,517,000 in your general fund, and your special reserve fund had just over $16,900. So how does that compare to the beginning of the year? Well, that's what you can see on page 7. So on page 7, it shows the revenues and expenditures for the year. You had a significant project going on during the year, and you anticipated that you were going to be spending down some of your reserves. So indeed you did. The net change in fund balance was a decrease of $964,000. Now there is a number that's a prior period adjustment. Essentially that was an accounting error for property taxes collected after year-end attributable to the wrong tax year. So we got the taxes lined up correctly, so let's put that $405,000. So you collected all the property taxes you were supposed to collect. It's just that they got recorded into the wrong fiscal year. So you end up with really a revised beginning fund balance of $2,482,000 less than $964,000. That's what gets us to the $1,517,236. Now, the one other schedule I want to show you in here is reference to your budget. So if you turn to page 22, page 22 shows you the budget versus actual for your general fund. So you anticipated that you would have $3 million, the first subtotal, $3,061,000 in revenue. You actually had $3,114,000, so there's a positive variance versus the prior year of $3,091,000. And then you anticipated that you would have $3.8 million in expenses, and you actually had a little bit more than that. You had $4,079,000. So your fund balance went down $964,000 based on those revenues and expenditures. So that's what I consider to be the highlights of the annual financial report. I'd be happy to answer questions that you might have.
This management's discussion and analysis, can that be put in later, or?
So that would be a document, if the library chose to prepare that would be a document where you explain your own financial statements. It's something that GASB recommends, but it doesn't affect that unmodified opinion on the financial statements. So if it is going to be done, it would be something that you would do for next year's audit.
Would you suggest it be done for next year's audit?
It's entirely up to the board. What we would do is provide Deborah with, here's a sample management discussion analysis, walk her through how to do it. But then she'd be preparing it because it's management that's explaining why the numbers change from year to year.
And actually, I asked the same,
practices for libraries.
I asked the same question, and Carrie already gave me some examples for next year.
Okay.
Because I hadn't seen this.
Because is this,
Right.
right, because every year, I was treasurer for several years, and I always
Yep.
want to see how things can be maximized and improved. And, you know, I don't want any questions.
Right, right.
So
We have some
do
libraries we have some libraries that say, sure, and the director prepares it, and we have some libraries that say, we don't want to bother.
And your recommendation is?
If you have the skill set with Deborah to do it, go for it.
I'll give it a try.
We've got a
And
skillful director
what
with an MBA.
what happens is, once it's prepared, it comes to us, we review it, give feedback. It's not like you're gonna end up with an MD&A into the document that is wrong. We're gonna look at it, make sure it's consistent with the financial statements. So yeah, we can walk through that process next year. Not a problem. The second document you have before you is the communication to the board. This document has, within it, those auditing standards have certain things that we're required to communicate to those charged with governance, which is all of you. And that's what begins on page 2. Certain things we tell you in this document, like you didn't have any significant changes to your accounting policies during the year, you didn't have any unusual note disclosures, there were no strange estimates that we needed to worry about in your financial statements. We go into page 3 and say, hey, there were some adjustments that we recommended to the financial statements as part of our audit, and so we communicate that to you and actually give you a list of those entries. We didn't have any disagreements with management. If we did, you wouldn't be hearing about it for the first time tonight, but we are required to communicate that to you. If you go over to page 5 are the page 5 and page 6 are the adjustments that we recommended to the financial statements. Those were all reviewed with Deborah and Blanche, and then those are then recorded into your accounting system so that your accounting system mirrors the final audited financial statements. Page 7 and 8 are just some minor amounts that could be journal entries, but they were amounts that were below our threshold from a materiality standpoint, so those were not required to be reported into the audited financial statements. The next document that begins on page 9 and then into page 10 is called the management letter. The management letter is basically a summary of, here's some suggestions for improvement. It's not a report card, but rather, hey, take a look at some of these things and see what you think, and consider implementing these as we go through the year, and then for next year's audit, then we always look back at those to give you an update on where you were at with those. So those are the items on pages 11 and 12. If there were any significant items, they'd be called like a material weakness or a significant deficiency. We've labeled these one item as a deficiency, which related to some unrecorded prepaids, and then the remaining items as other comments. So basically what we're saying is, based on our standards, hey, we're going to tell you everything that came to our attention. Are these earth-shattering things? No, not at all. Are they things you can take a look at? Absolutely. And if there's any assistance that you need in implementing any of these, we'd be more than happy to assist you. Page 12 gets into the new GASB statements that are coming out. The GASB statement 68 will take the pension liability and put it up on that global financial statement for the first time, so that's a significant implementation for the library next year. Page 14 is the appendix, meaning these are the comments from the 2013 audit, and some of these comments were implemented, actually, the majority of these comments were implemented. There was just one related to accounts payable that we did identify some accounts payable again this year, but all the other comments were implemented. So that just tells you that your staff was paying attention, and you know, Deborah was asking us questions, saying how do we implement this, and staff as well. So that's always a positive thing to see, you know, that you're trying to make improvements. So those are the highlights of this document, but happy to answer questions.
Is there any in-servicing necessary for these 68, 69, 70, and 71 for next year?
I would definitely pay attention to offerings from IMRF and from IGFWA. There's webinars that are available to you through those organizations. I would imagine some of the library organizations will also have information. GASB 68 would be the one that you really want to make sure that you understand. Not so much that you have to understand how to implement it, but just understanding what the impact is on the financial statements. Like I said, it won't change the way you fund your pensions, but it's going to change the way the pensions are accounted for. So if you think about, let's say you had a mortgage that you had to repay, we would call that a fixed obligation. You have to make payments every month, right? Compare that to a pension liability. Yes, we have to make payments, but we don't have a fixed payment cycle. We get an actuarial report every year that tells us how much we need to contribute. That's not really a fixed liability, because it can change based on if our salaries are higher than anticipated, or our investments do better or worse. So that we're taking a non-fixed liability and treating it like a fixed liability, and that's not really how things have been accounted for in the past. And the main reason for that is that there's too many pension funds throughout the country that GASB looked at that said they're not putting any money aside for these pensions, and nobody seems to know about it because it's just kind of hiding in a separate section of the financial statements. They're saying if we actually put these on the financial statements and show how poor off that these entities are for not funding their pension, that it might make a difference. So it wasn't intended for most of the local governments in Illinois that participate in IMRF for local pension plans such as you have. So that's kind of a taste of 68. That's my 2-minute webinar for you.
Any other questions?
Is there a certain percentage where you feel that you're funding the pension to a comfortable level every time?
I think what's important is that you have to pay attention to what your actuary says and fund at the level that the actuary recommends on a regular basis. Yep.
And that's what will be reflected on the statements that we're following through with that?
Correct. It's just that the following through with it means you're trying to get fully funded within 30 years, which is fine. But the statements are going to reflect that there is a liability, meaning the actuarial liability versus the assets that are set aside.
So is that large liability going to make our balance sheet suddenly look really bad? Or?
Correct. So if you turn back into annual financial report, page 23, for the MERP plan, if you take these numbers, the unfunded liability in column 4, 1,713,000,
Right.
that's now going to be a liability not on those global view statements. So the ones that I said aren't the ones that you necessarily use.
Okay.
It's going to go up on page 3.
So it's going to wipe out
It's going to wipe out a fair amount of that net position. But the operational statement that you use, which is page 5 for fund balance, it's not going to touch that.
Okay.
It's only going to be a full accrual entry. And that's why I say for the majority of libraries and library districts that we work with, yeah, the top statements are going to look different, but you're not going to operate any differently. You've demonstrated on page 24, you've demonstrated that you're putting in what the actuary recommends that you put in. And that's what tells the whole picture.
So as long as that's the case, we'll still get a good rating, but it's just going to have some nasty looking numbers in the front.
Correct.
We'll just look at a different page.
Yes.
Yeah, I would tell you that, I mentioned the plans, that aren't putting in what the actuary recommends.
Mhm.
This date is, and if you ever see something in the paper, someone took a pension holiday, that means they contributed 0 for the year. That date has already been here. An informed user of the financial statement already could have
Would
looked
have
to page
seen that.
24 and saw that. So it doesn't affect what you look like. Somehow Gatsby thinks if it's on page 3, you'll see it, but if it's on page 24, you won't. That's the thought process.
Yeah.
I look at a pension plan by a combination of 23 and 24, saying, okay, it's 48% funded, but there must have been some things happening with that plan because the library's been putting in exactly what it was told to put in. So you can't do any better than that. No one's in the position with tax caps the way they are to just start putting in more money than what the actuary recommends. Because once you put it in, it's in trust.
Mhm.
You don't get it back out. You don't say, oh, we're gonna put an extra $200,000 in there this year. Oh, I wish we didn't do that, let's get it back. No, once it's in there, it's in there.
Mhm.
And that's how pension funds should be set up. But that's why you don't typically see plans or libraries that say, oh, we're gonna put in more than what the actuary recommended. Because then it ties your hands. You don't have the ability to use that for operations or projects that you need to, accomplish within the case.
Makes sense.
So the contribution is only done by actuarial calculation?
The contribution's based on the
Contribution.
actuary. Yeah.
Is there such a thing as 100% funded pension?
That's always the goal, but you only really need to be 100% funded if everybody's retiring tomorrow.
We got 2 years.
In the city.
Gee, thanks, Mark. You can retire anytime with your pension.
So, does anyone have any more questions for Brian?
Not.
I have the actuarial report as well to show. So.
Okay.
Thank you very much for coming.
You're welcome.
Thank you.
I love when we get good reports.
That's because we're doing
Have a good night.
it.
Since we're doing
Oh,
that,
yeah.
I have the actuarial reports for this year as well. The one that was reported in there was last year's, of course, and this is the one that was just done this spring. And,
40% says
Oh, it's a different color, that's how we know.
it's pretty good.
Okay, so we moved 2 of them.
yeah, that's how you can tell the difference is blue. What's important in this is simply the number that you will now owe this November, which is, and that's what will show up in next year's audit, is the number from this one. And I had it, remember though, I should have marked the page. It's on page 8. Their contribution requirement for this year, which will be made in November, is $145,975. And as he mentioned, we'll make that payment, we'll still only be probably around 50% funded or slightly less, but it won't give us a bad mark as long as we make what the actuarial recommends that we make.
And we've budgeted for that.
Yes, we have budgeted for that.
Because we probably over budgeted, huh? Because
No, last year he mentioned around 140, so we budgeted just about right.
Because I see that it's 37.84%, which is less than, what was it, 44 this year?
Well, we had someone take the retirement last year, and this year we will have more retirees, so next year it will change again. So as people they took a lump sum last year, so that took some out of the fund, so that reduced the amount. So every year it will be affected by what actually happens with retirees.
Okay. So this is IMRF.
This is not IMRF. This is the MERF fund.
Everybody except the 6.
Well, everyone except the 6 are in IMRF. This is the 6, plus people that have already retired. These are people that have been here for many, many years.
Okay.
And those that
Now
This is the
5,
old
right?
plan.
and
Yeah.
it will be 5, but it's right now it's been 6. So this is the old plan. There are a number of people on it. If you look at page, it tells us that on page 2. So there were 6 active members when this was done for last year. There are 9 receiving benefits. 5 inactive, that means they are no longer paying into it, but they're not yet retired and receiving benefits. So those 5 at some point will start. So there are 20 people that are affected by this plan, that either work here now or did at some point. And all the rest of us that are in retirement funds here now are IMRF, and that's much higher funded, and it's, not a problem for the library.
We don't get a separate report anymore.
You don't,
That's a municipal one, it's run through the
The
village.
village, that's
okay,
the,
so it's, that's.
So
thing
they,
that we
they give you
write the
your
checks
bill
to.
and that's it.
And then you just,
Oh, I'm sorry.
go ahead, go
Will
ahead.
this eventually end?
When everyone
this
dies.
plan? Yeah. But any new people aren't
No,
going
no.
on, okay.
Right.
not for many years they haven't been on.
Okay.
Any other questions, comments? We're on number 6 on the agenda. Public comments, not agenda items only,
There's no problem.
nothing? Okay. President's report, briefly.
New guy.
Did you say something nasty?
No.
No.
I'm going to, I was gonna do it down
Oh,
there.
because she was-
I brought down, and there's some at both ends of the table, invitations for the reopening, grand reopening.
I got one in the mail.
So did I was wondering, is everybody in the village getting them in
No.
the mail?
No, that's
okay.
why we're
Oh,
giving you
no?
extras that
To
you can
hand
hand
out.
out to
Okay.
friends and family.
They're on the books and
So
beyond. It's on
take
the
as
front and
many
back.
as you want for
And
friends and family.
many people, some people received mailed invites, but not the whole village, because they all got it on the books and beyond, 9,000 books and beyond.
Okay,
now.
except
I
for,
don't have that many friends.
So just take a few with,
Yeah,
they're here.
I've
they're-
taken care of my friends here.
Oh, I thought everybody got it.
No.
I Just dismissed.
Just the
So it's a good way to, and, even if they're not from Morton Grove, I think we got something to brag about upstairs. So,
I will invite those who are potentially donors.
There you go.
There you go.
Yeah, do we send it to big businesses in the?
also you
The
got in
chamber
your
is publicizing.
packets, the new
Yeah.
foundation pamphlet, which, if you know anyone that might be interested in being part of the foundation, they should contact Brenda Ross, who's handling this. And I've got her phone number if anybody wants it, or her email. But if you know somebody who's interested in the future of the library and is looking for a way to volunteer to be involved, it's a good way to do it.
Question about the Baxter.
Yes, ma'am.
Is there a piece of paper somewhere stating how long the Baxter room is? The Baxter
We
room?
haven't found one, we have looked, but.
Yeah. Because we've talked about it, but it's an issue.
Yeah.
Well, I just think we have to make really sure that,
Yeah, we need to look at it.
yeah.
I think the last thing we probably should do is send a letter to them and ask them.
Yeah,
What are you trying to do?
The Baxter Room.
if it can be renamed
If
after
we
X
could
number of
rename
years.
it.
Oh, okay.
Or did we sign
Say
something that's saying in
something.
perpetuity,
Okay.
as long as that structure sits there, is it the Baxter room?
There's interest in renaming it?
Well, if somebody wants to
If
buy
somebody
it,
Oh.
wants
For the
to,
right amount.
Yeah.
for the right amount of money, you can have anything you want.
it could be the Stephanie Gray room.
Yeah.
You could even have my
Better start buying
kitchen.
lottery tickets.
I'm close enough to the library that you can use my kitchen if you want to auction that
Yeah.
off too.
Naming price.
Okay, one last comment. This calendar it's not anything official, it's just a guideline, it's taken right off the bylaws, when things are done and when they're not done. It goes through every step conceivable, it's been checked and rechecked, and I'm sure there's mistakes on it. But it's nothing official, it's just, it's a guide to using the bylaws effectively on when we meet and et cetera, and when certain things have to take place.
My eyes started to cross as I was looking at it.
We had a huge revision of the bylaws last year, and there wasn't any general overall,
No, it
things
makes
were getting
sense.
missed.
Yeah.
And this way,
This way,
when
it
you
just,
set the agenda, everybody knows, okay, this goes here, this goes
it
here.
basically
It's a
helps
good idea.
Deborah more than
Yeah.
anybody,
Yeah.
because she's the one that puts most of the agenda together, so. Okay, that's my report. Finance Committee, financial report.
Did not find anything strange or extraordinary when we met.
Does everyone have a cash statement? Some of the packets
Some of the
do have
packets are
this.
missing.
If you're missing this, let me know. I'll pass
Cash
it.
statement.
You've got it there, Kyra.
You
It's-
have
This
it
one.
now.
What's
I
that?
got it.
Kathy, do you have it?
Yes, we have it.
Okay. It was on market.
Just mark it.
I was
Yeah.
just,
Yeah, I have
No,
it
me
too.
too.
Just me.
I was deprived.
You did the part too.
I felt it too. It was
Just a
a major
question.
depression that struck me.
This is extra check fund for Kevin,
Where are you?
that was,
37,554 for 1,552.
You circled it too.
It's reimbursement for something he paid out of pocket. He accidentally used his own credit card instead of the company credit card. Do you remember what that was for, Blanche? I remember him doing that,
Yeah.
but I don't remember what it was for.
This Midwest Library Systems that came off, on and off, I don't see it listed under something else for the same
It's
amount.
because we used that $16,000 account that we've been trying to pay down, and we intended to use that from that.
Oh, the reserve?
Yes, the reserve account. So the shelves we paid for from the special reserve
Oh,
account.
those are shelves.
Yeah, those are shelves,
Got it. So that's just an accounting thing?
yes.
Okay.
And I want to mention too, because I had to think about this, if you'll notice, it looks like the
Oh.
miscellaneous income is high, and at first I'm thinking that was just that we sold them out of bags, but then I recalled, and I went and checked with Blanche, that one of the things on our audit was to get rid of the escheat monies. That was one of the recommendations they made this year, so we've already done that. What that was is checks from years ago that had never cleared. So Blanche called every single business that had one of these $50 or $100 checks that had never cleared, and they would all check their books and say, you don't owe us any money, then we'd be able to clear that out. And that came in looking like miscellaneous income. It isn't real money, it's
The
money that's.
other question
Yeah.
I have is, how come we're running at 81.28% of utilities?
That would be because the roof was open during the middle of winter and we spent a lot of money on heat. We got a very
You
large,
get no air conditioning this
Oh,
year.
Yeah.
we had to heat, we heated it?
well,
Well, people were working.
people were in
there.
other parts of the building and people were working there.
Oh, so
So
it was
even-
just the loss from
It was a loss
the
of
rest of the
heat.
building?
Well, people were
Okay.
working in that space. You might have had a tarp over it, but it wasn't holding heat very well. So we got a very large bill for that.
they had to keep the pipes from freezing.
Is there any way
Yeah.
that could be considered part of construction cost, instead of what coming off the utilities line?
It would just be
What
shifting it
percentage?
to
What
another.
would percentage would be, it's just shifting money.
And then we'd have to take
And
estimate.
then you'd have to explain why.
By the month.
Yeah,
That's
I mean,
all
it just
from
looks
one.
bad that we blew through.
Why don't you invite Art to sit at the table?
Pardon
Why
me?
don't you invite Art to sit?
Oh, hi, Art.
Art, why didn't you come join us as your last
I'm observing.
privilege?
It's my pleasure to observe.
Thank you for coming. Do you want to put it to a vote to find?
I had, any other questions? I had none. Things seem to be tracking the way we thought it would.
Have we paid everything for the construction?
Not completely,
Not
and
completely.
that's further down the agenda, but we
Yeah.
have paid a great deal of it, but there is some.
Okay.
You want to call me?
Yeah, I want to call for, did we have a motion to accept?
And
it?
a motion to accept the treasurer's report.
Second.
And a second?
Second.
I'm sorry. Call.
Okay. Trustee Gray?
I say aye, or?
Yes.
Yes.
Okay.
Yes.
Oh, yes.
Yes works.
There you go. Trustee Novick?
Yes.
Trustee Peters, yes. Trustee Elbers?
Yes.
Trustee Berg?
There
This is still absent.
Still absent.
Trustee
Still
Calloway?
absent. Yes.
And Trustee Gonzalez?
Yes.
That motion passes now 6-0 to 1.
Okay,
Okay.
next topic is facilities, and
We did not.
there was no meeting, however, that would deal with special use
Yes,
update.
just briefly, I did attend the village meeting, and as expected, we were remanded back to the
Planning.
planning commission, thank you. And so this Monday night, we have submitted another formal traffic study that hopefully meets all of their recommendations. I went back and forth with the engineer with the list from the village and tried to meet their requests. So Monday I will be back at the planning commission and hopefully moving forward.
Did you find the turnaround?
No, I still don't know what time that meeting is. I think it's 7:30, but
I think it's 7:30,
but hopefully
I'll be there for
If
another
you
meeting
need us to
before.
pay your chiropractor bills from jumping through hoops, we will cover that.
That's very thoughtful of you.
Thank you.
But you have a physical therapist or two on staff here, you know.
The board.
We could use them, they're cheaper.
Um,
Okay, policy committee?
We met, and there were 3 policies we looked over. In fact, there's 2 we looked over. The capitalization policy is a brand new policy, so we came up with a new policy.
Again, in response to the audit, that was
Right,
another
I saw
recommendation.
that.
Right,
Was it
right.
based on somebody
I was
else's?
gonna say, did they give you
Yes.
something to work with from?
We looked up
Yes,
several other libraries.
yes, she had something.
Actually, Barbara looked up several other libraries.
Right, and we kind of just put everything together.
And she made it make sense.
Right, right, and typed it a little bit bigger.
We typed it bigger, yeah. Because some of us are
And
getting
took a lot
older.
out. And the other one, we, use of the Morton Grove Public Library by children.
Any changes?
There were
from last year?
changes, I think it was,
What?
most of the changes were the years, like 5 years, an 8-year-old, a 10-year-old, if I remember.
Well,
Courtney,
okay.
can you tell us what we changed in that policy?
Just
Just
the
a
end
little
of
bit
it.
of wording and the headings so that they're more consistent.
Right.
Yeah, it was
And where
nothing.
And I
adult
add- at the
presence
end
is
of
not
some of them,
required.
Yeah, where adult presence is
Yeah.
not required in the program. Because if we say that we only
You're
want a
great
child there, we don't
grammatically.
need a parent, then a
And
parent should be.
when I looked at
Right.
this, well, anyhow, so I had a
Which sentence
question.
did you-
So when I'm looking at children under the age of 5 years, well, my first question was, how does it differ from the previous? And the way I read the first one, children under the age of 5 years, you know, unless the child is attending a designated library program, well, who's caring for the child, and does that allow the parent to leave the facility, the way it's written?
I'm looking at Courtney.
So, I mean, I just, the way it's written, I don't see where the parent needs to be anywhere on the property. They can just drop off a child under the age of 5 and leave it in our care.
Yeah.
And I don't think that's our
That'd be a
intent.
bad idea.
For a 20 or 30-minute program, are they supposed to stay in the library?
In the
Some-
library.
Okay, so we should add that.
I didn't see that, nor did I see it for children 5 through 7, which I think at that age needs some guardian.
So how are we gonna
So
reword
the
this?
first two.
Why don't we take it back to the
5
policy?
to 7, it says
Okay.
supervising adult or adolescent must remain.
We'll
Then
just-
as long as
just-
we're doing that, let's force this unattended children down to page 2.
Yeah, well, yeah, because I put the over on
Well,
there.
yeah, this is gonna go on the website, no matter how it lays out on
Okay.
paper.
Well, oh, you're not putting it in policy?
It'll be one long, the policies are all on the website. It'll be
Oh,
one
okay.
page.
So
When
we're-
the committee
Print them as
got
needed.
the changes,
Then we'll have to strike this last line here, because we're not gonna revise and approve it
Yeah,
tonight.
we'll.
So the
Okay,
reason
and
that-
then children ages 8 and up, the second line, any child who's at the library without supervision, we don't qualify the type of supervision. Does it need to be parental? Is it a guardian? Is it us? We just say without supervision. What kind of?
It
And
can,
what do we intend it to be? I think it should be clarified.
okay.
Okay.
Yeah, they can have
Parental
that 14,
supervision.
well, 14 and above, the same thing was under 5.
Yeah, and then if,
Adult or adolescent age 14 or older who has been designated by the.
Mm-hmm.
well, that's why I figured. once we get
Can a
this clear.
14-year-old legally?
Well,
You
not,
too.
Taking care of a child, can we
Yeah.
endorse that?
That's just come up recently.
Yeah.
babysitter.
they can
Now-
babysit.
Yeah, but I mean, can the library say,
Can we assume the liability?
exactly, that's what I'm saying, can we
We
assume
don't
liability of a
have
14-year-old watching some kid?
But the state law now says you can't leave a child 13 and under by themselves. So, at home, so technically that would make a 14-year-old okay to leave at home at whether or not they can babysit. The Red
But-
Cross says 12, but the state of Illinois now says 14 at home. So that's something that came up in our
I think
meeting.
we've always allowed babysitters to bring kids to the library. Babysitters are usually between 14 and 16 years
Right.
old.
I know 14 can babysit.
Yeah,
So I just wanted to let you know, so the reason that unless the child is attending a designated library program, all of that is clarified under children attending library programs, which is the thing underneath special needs children. So it then says, if you're attending a program, you have to actually
Oh,
stay
yeah.
in the library.
It does say
So maybe
that.
we,
Yeah.
I mean, we
Could you
can
say
tweak it and move
C?
it, but
Children's attending
we
the
can
library
do that.
program.
Most of the time too, I would add that if there is a 14-year-old watching a younger child, it's usually a sibling. Very rarely. Because that age babysitter doesn't usually take them places. Yeah, they can't drive, so, but a sibling might walk to the library with them, or the parent might drop them off with a
Right.
sibling in charge, kind of thing.
so we will send it back.
And
to
since you're
committee.
trying to do policy, the back page, the second line at the end, if unable to reach the parent or guardian, the library may. Generally, policy dictates a certain direction, so you either will or must or something. You can't leave it,
Yeah, way, well.
you can't,
And
leave that to be a
next
decision.
time, maybe we should reproduce these with the red print, which we had in the committee.
The part that had been
Yes.
The part that was changed was in red.
Yeah, very,
Highlighted
this is,
or
this has been this way since 2015. The
very
things you're talking
good.
about now were
Changed.
not,
well,
were not changed, but those are good suggestions. So we'll take it back to the policy committee and update that one, so we won't
Okay,
vote
we
on
won't
that.
vote on that.
but you're okay on the capitalization policy.
And then the other one was the spending policy, that one more.
Any changes?
Yes.
Yeah, we took out
It's been a confusing
a
section.
paragraph.
That didn't make any sense.
There were lots of, this was made just a couple years ago, and there was a lot of,
We tried to clean it up.
There was just one paragraph where it sounded like even though I couldn't spend over $5,000, my department heads could. That's the way it read.
Right.
So we
Right.
just took it
We
out.
just took it out.
Yeah.
If the department had believed the purchase should be made from a certain vendor.
They're going over there, why'd you do that?
oh, you know what, that was for the expensive stuff Kevin buys. That's how that happened.
But that still has to be approved in the budget.
It still has to be approved.
Right,
Unless it was a repeat.
right. He has several contracts, like with
That's
Sickage for.
what, and the Cersei and all
Yeah,
that stuff.
that's why
what
that was in
for.
there?
That's why that was in there.
Okay, well, that's not how it read.
Oh,
Yeah,
I'm
really
just remembering why
Okay.
it was in
Yeah.
there.
That's actually sort of makes sense, but that didn't dawn on any of us. We kept trying to find a way to make it fit and reword it, and we finally just said, let's just take it out, because everything that we need to do
Well,
is
does
covered by
that,
the other
does that
steps.
uncover him for the recurring?
No, because that's kind of the law. If you have a relationship and we have approved it in the budget, that would cover that.
Then you're okay to
Then we're okay to
to
redo
use
it.
that vendor.
Okay.
Yeah.
So, ready for more comments?
Oh, sure.
So the Board of Trustees is responsible for approving the expenditure of all library funds, period. Over which it has control, I think, is just not unnecessary, because
That is
that's
extra
what we
verbiage.
do. So therefore, eliminate however, so the library director is authorized.
So
When
take
I-
the river out.
Yeah. So then when I go down to 3, the library director shall not enter into any contract for services, I think period, without appropriate board discussion. And the board will consider the contract, and I'm taking the dollar qualifier out of there because we're saddled with that. Board will consider the contract, and I'm taking the dollar qualifier out of there because we're saddled with that goofy water tank upstairs that fell under the, remember that, okay, remember
That's a
that?
3-year or a 5, there was a 5
Right, so we were stuck with that thing for a long time.
years.
I don't know
And
what you're
even
talking
that
about.
was under
Oh.
this amount of money.
2 directors ago signed a long-term contract for a water cooler that stuck us for buying water at an exorbitant price for
Yeah.
an exorbitant length of time.
That thing that's up in the conference room,
Oh,
that we're trying to get out of.
well, we
The
looked
guy
at other
said we
places
can't
and
get out.
they all cost the same now. We did look at another company, it's the same charge. We haven't been able to find anything cheaper because we've been looking.
Well, I wanted to qualify that anyhow, that it at least comes before the board, before we get into long-term contracts.
So what
Well,
comes before the board?
We can't
No.
take that out, because if we take that out, Mark, Deborah won't be able to spend a penny.
Can't spend
No,
any money.
this is for a contract for services, for a period
Well,
exceeding.
So
So
we're
I-
not
we do
doing
lots
any
of
contract for
services.
Services, period?
No,
Is
that
what it
exceed
said?
a year,
He
or
wants
for
to
an
split
amount
them up
exceeding
into two
5,000.
things. The contract is separate from the money.
So,
I
okay,
think is
so
what
2
he's saying.
still authorizes expenditures, 3 takes away contracts.
Yeah.
Oh, I see.
no, three's
Should
just
not
saying,
enter
hey,
any
if we're
contract for
gonna.
services, period.
Yeah, period,
Because what
without
happened
board.
was, without.
Yeah,
I
we
see.
got roped into that, somebody got roped into that.
Yeah.
Well, okay, but then like the contract I had, I signed a lot of contracts for construction and
Which was all budgeted and
right,
approved.
okay. And what about like for this, when I had to find an engineer to do the extra traffic study, that would have delayed us a month if I hadn't been able to just do that, but.
But that's not a service that took more than a year. This is
Yeah, but you were taking that out.
saying,
You're gonna leave the work more than a year in there?
contract for services.
I mean, services includes,
Millions.
yeah, the sump pump needs repairs, the things we,
I'm just throwing it out for discussion,
I
so.
think we might be trying to kill a mosquito with a can.
Yeah, that's, it could be.
You can always change it if you don't forever changes.
Are we making any changes then to the spending?
Well, in 1 and 5, I think I would combine those two. Because you're trying to qualify a purchase between 5 and 20, and then down here you go more than 20.
Mhm.
But each of them asks you to go out and get a bid.
Mhm.
So I think you can clean that up and put those
So
together.
1 is quotations, 5 is bids.
Yeah.
I can ask for quotations, I can go straight to the company and say quote on this, but for 5, when you go out to bid, that's when you put the public announcement and you let them come to you, so. And that's actually the law, that's for number 5, that hasn't changed. Well, I think that it has actually gotten a little more lenient in that if you find reason to use one of them that isn't the absolute lowest, it's a little easier to do that now,
Mhm.
but you do still need to go to bid.
But you just wanted to combine 1 and 5. and
Well,
make
I
it
just-
one, yeah.
Well,
There is a
We're
big
gonna-
difference though between
There's
a
a-
quote
there's
and a
a-
bid.
yeah, between,
Mhm.
They could be put next to each other because they relate to each other.
That's true. Renumber them.
Too.
Could be number 2.
Would you make number 5
2.
number 2?
well, you have to write this so you don't have to explain it to anybody in the future.
3, 4,
That's
5.
what we
Right,
have
right.
to do.
Well, that makes more sense, because you say in the beginning, you're talking about the
Yeah.
bids, and then you're talking about the, the quotes, and then you're talking about the bids at the end, so if you put it 1, 2.
So right now, if we have the following changes, that the first sentence ends with the word funds, period, and strike out through the word however, and then the renumbering. Is there anything else that we are reflecting on this?
Number 3, did you say that? I'm sorry. Well, I did, will not enter.
Oh, 12, did we finish talking about that though?
Number 3,
No, well, yeah, the
Yeah.
new number 4, the old number 3.
well, that's the one where you said we're trying to shoot mosquitoes.
I thought so, but-
So if you wanna let
But
it,
Carlotta,
No, I mean, that's fine, I just wanted to know if you were gonna consider those changes. The library shall not enter any contract for services, period. The Board of Trustees.
I would like to leave it the way it is, and what's
Consider
on my
the
mind
contract.
is the lift that's being put in. I would like to see more than a 1-year contract on maintenance, because those things are,
But you only
Tend to break
contract
down.
a year at a time.
Yeah, that,
You don't contract multiple years on maintenance, generally.
I will bring that to the board when the time comes.
Yeah.
Don't we have Xerox machines still that are under multi-year contracts? Unless those have expired.
I don't know, are those multi-year plans, do you know?
Lease, yeah.
The
Some
leases, they're
3,
3-year
some-
leases, right?
Yeah.
It's cheaper to go for 3 years, they don't.
that's the
Yeah.
thing, you're
Yeah.
losing the advantage of a long-term.
Public is 5? Yeah, one is 5, one is 3.
Okay.
So in other words, leave it alone.
I
I would like to leave it alone. Well, let's, take each one separately. Let's take a vote on each one separately.
Well, I'll motion to approve the capitalization policy as presented.
And I will second it.
All in favor, or does this have to be an individual vote?
Trustee Noel,
Yes,
trustee Peters, yes. Trustee Elbers.
Yes.
Trustee Callahan.
Yes.
Trustee Gonzalez.
Yes.
Trustee Gray.
Yes.
Motion passes 6-0.
okay.
We're gonna table the.
There were a lot of changes on that one, so
The children's
I'll
one
motion
will-
to table the use of Morton Grove Public Library by children policy. We just need a second.
I'll second it.
Okay. And then we need a motion to approve.
Yeah. Only right. I'm just-
Don't give me
Trustee
excuses.
Peters, yes. Trustee Elbers.
Actually, the table, you have to call it out. You just let it go.
Table one, you can let go.
Oh, you got the
Yeah, I
table.
did, I
Okay.
did say table, okay. And then the
This spending policy.
spending policy with the reflected changes.
Second.
I'll motion it.
Okay.
I thought we're still gonna refine the wording.
This,
Yeah, that's in there, that's
Just
reflected.
refining the first sentence
Oh, okay, all right,
and
And changing the
reordering the
numbering.
numbers
okay.
are the changes.
Do I hear a second?
I'll second.
on the board.
Why, she's really on the board, isn't she? She talks, she questions.
Don't let it please
I had a brother, I
Yeah.
had a brother.
You've been
Go
teased.
back.
Okay.
Okay, this is, we'll.
Call that question.
Spending policy with changes. Okay. Trustee Elbers.
Yes.
Trustee Callahan.
Yeah,
Trustee Gonzalez.
Yes.
Trustee Gray.
Yes.
Trustee Noel.
Yes.
Trustee Peters, yes, passes.
Okay, anything else from the policy committee?
No.
Okay. Staff report, Mr. Rector.
I would very much like to introduce our new young adult librarian. This is Dan Thorson.
Hi, Dan.
Hi,
He's,
Thank you for having me
He
In
in
comes,
the long run today.
And what kind of librarian?
Young adult.
Teen and
Oh.
adult, which I did for about 2.5 years previously, way down in Crete, so I'm much closer to home now.
Wow.
As feel very lucky to be starting when I am. It's going to be a very exciting time for teens at the library, and consequently for me, I think. That's
Awesome.
all of
All
you to thank
good.
for that.
Okay.
we
So
have
you are nearer
8
here
kids in the
than
teen
Crete.
room 2 nights ago at the same time.
Yeah, and we had that again today, and we also had every single study room, including the larger room with 5 teens. They were all studying for final exams, and most of them actually were studying. There was one I had to warn, but the rest were doing what they were supposed to do. So.
And my girls checked out the teen room on Saturday
Mm-hmm.
and gave it the big thumbs up,
Yay.
so.
Excellent.
Well, thank you.
Thanks for
All right.
having me.
Thank you, welcome.
Thanks, welcome aboard.
That's the main thing I wanted to point out. I put in the back of your packet a couple of letters that we got. I was gonna mention those during communications.
Oh, yeah,
We got
okay.
a couple of nice letters. So any questions about the director's report?
I wanted to ask, in terms of the numbers for circulation, thank you, and visits, are there, do you know when you expect them to sort of,
Well, we just reopened, so
right, no, I know,
they've
but I didn't know if, like, other libraries who have had big
How long
projects,
does it
like
take?
how long it usually takes, if you have a
been- don't really know
theory.
what to
Okay.
expect, because a lot of our patrons have gotten used to using other
Right.
libraries, but now our collection's back open, they're already coming back pretty quickly, so
Okay.
we expect those numbers to climb. And I've been pleased that they didn't drop lower than they did.
Okay.
I felt that considering, you know, if 50%, if most of our adult collection's gone and we still have 50% of the circulation with the few books that we're offering, I thought that was pretty good, so.
And I think the Champion's done a good job of keeping up with what's going on, and they've been positive about
They've
it.
done better with the library than they do with other things.
There you
They've
go.
done, they've done okay, yeah. They've sent me emails and asked me questions, and for some of their
Although they
understanding.
totally rewrote my letter, but it's,
They shortened
But the
it.
bugle.
no, they didn't shorten it, they moved the sentences around.
Oh,
So it didn't make,
That's their
and
editing.
it didn't make sense when they were
Haven't seen
through.
it.
That's what they did.
I love it. I have one question. The wall shelving that was falling down, I assume it's all resolved.
Well, it wasn't until today, we had another piece come loose today,
Hmm?
so, yeah, that was a little distressing. We were very, and actually, that would be why, one reason we redid the check with that company as well, is I did stop payment on it initially when we had trouble.
Right.
And then they supposedly fixed it and I paid them, and today we had something come loose again. But we do have extra supports that we were planning to add, and we're just going to have to add them sooner, so, the wall shelving. And it has to do a lot with the structure of the walls themselves. So we have a plan for that.
They're plaster, not plasterboard.
Well, some of them
No, they're
are
all
plaster.
board, they're all wallboard.
No, they're not.
No,
Some
they're
of them are
not.
plaster, and
That's-
underneath
you can
that
see
is
it.
cement blocks, and some of the blocks are hollow, and it's an interesting challenge. But we brought them back, they reinforced everything once, most of it is fine. There's one weak spot that we're going to reinforce everything again anyway, but
Are we doing it, or are they gonna do it?
Thank you.
no, there's no extra charge. We've got the tools and the pieces to do it, so.
Okay.
Oh, so we'll do it.
And there was no extra charge
Do
when they came
we
back
have a
before.
new head of maintenance?
We do. I can mention that. His name is David Hesse, and he starts Monday. So tomorrow is Claude's last day, and David starts Monday, so there'll be just a gap of the weekend. They met, they bonded, they get along. You said they look alike.
They look alike?
They both walked into the room and I looked at them like, you gotta be kidding.
I didn't even realize it
So,
during the interview process, but when they stood side by side, it's like,
Brothers, yeah.
oh, yeah.
It's
So-
a breed.
I think he's going to be
Yeah.
really good, so we're excited about that. And I've already been talking about the things that need to happen, so
Yeah,
we're gonna keep him real busy.
Yeah.
But he has the skills we need, so.
Great.
One other question, what's happening with the Baxter room at the lake? What is it?
That, we're gonna be
It's-
approaching that down.
Oh, with the
Later on
extra
the
money thing?
agenda.
Yeah,
Oh,
that's in the
okay.
agenda still, so
Okay.
that's coming.
Okay. Any other questions for Deborah?
Would you like to pause and take the picture with Art?
Yes.
Because he's here to photograph, and then he doesn't
He
have to
looks his
sit.
best right now.
Thank you.